Hey, what's going on everyone? It is Zach here from On Cashflow, and we are talking about Lean Fire. Everything that you need to know is going to be discussed in this video. Lean Fire is the best fire, in my opinion, for many reasons, and we'll go over some of those reasons today. And if you are on the path to financial independence or you're interested in becoming financially independent, then you definitely need to stick around and watch this video and learn about Lean Fire. But before we go into Lean Fire, we first need to discuss what FIRE is, just so we're all on the same page. So FIRE stands for Financial Independence, Retire Early. And the short reason for why you want to become financially independent is so that you do not have to rely on work income in order to survive. It is the ultimate form of financial security. It also allows you to take more control over your time and allows you to choose what you want to do rather than have money and have work dictate your life. Of course, there is much more that goes into the philosophy of financial independence and why you should probably be pursuing it. But we're not going to go too much into detail into that. We are just going to generally overview right now. And usually when we're talking about financial independence, the general rule that comes to mind is having 25 times your annual expenses in investments. And that means that you are financially independent. So once you reach a net worth of 25 times your annual expenses, you are financially independent, or at least as the general rule. So, for example, the most commonly used thing that I use and most other people is $40,000 per year. So if you spend $40,000 per year and you multiply that by 25, you will get $1 million. So if you have $1 million in assets, in theory, you can safely spend 4% of that per year, or $40,000, and your money should last you a lifetime. And there's a lot more math and statistics that have gone into that number, which again is beyond the scope of this video. But that is basically what financial independence is. Amassing enough wealth to where you can live off of your investments if you chose to do so. So now that we know what FIRE is, let's talk about the lean portion of it. So when we're talking about lean FIRE, that lean really means cutting your expenses down to a small minimum. And usually that can be defined in many different ways. You know, if you ask someone what is lean FIRE, what annual spending amount is lean FIRE, you'll get many different answers. But it's usually accepted that it's less than the median annual household income. So the median annual household income in the United States is about $62,000. And luckily that has been going up. But let's keep in mind that that is household income. So household income means everyone living in that household. And the median household number is 2.52 people. Of course, you don't have just 0.52 people walking around in the household, but on average, that is about how big a household is in the United States right now. So if you take that median household income of $62,000 and you divide it by the 2.52, you come up with about $24,603 per person. So if you can just correlate that into a couple that is, married and just living on their own, that is about $50,000 per year. So when you're talking about lean FIRE, at least in my definition and probably many other people's definition, if you're spending less than $50,000 per year, as a married couple, then you're probably in the lean FIRE category. And of course, it's really important to note that lean is very relative, because lean FIRE in a very high cost of living area such as Los Angeles is probably still going to be a higher spending amount than lean FIRE is going to be, say, in a state like Iowa or something like that. So usually, the high cost of living areas, your lean FIRE is still going to be a higher spending amount than the lean FIRE in a lower cost of living state. And that is another important reason why geographic arbitrage, which is just moving to a lower cost of living area, is one of the big pillars of financial independence, and it can really just supercharge your way to becoming financially independent. But that is another discussion. And really, everything that this channel is about, On Cashflow is a lot to do with just personal finance in general, but heavily geared towards financial independence. So if you are interested in financial independence or just becoming a master of your own cash flow, then I invite you to subscribe to this channel, because I am putting out new information on personal finance every single week, usually Tuesdays and Thursdays at 3 p.m. Pacific Standard Time currently. And I know that there is something that I can help you with. So if you're not subscribed, please subscribe to the channel. If you are, thank you so much. And if you're enjoying this particular video, go ahead and give it a thumbs up. Give me a like. It really helps me out. I really appreciate it. And let's get back to it. When it comes to lean FIRE, probably the biggest question that you have in your mind is, how much money do I need in order to achieve lean FIRE? And again, that is going to depend on your specific spending amount. But if we use the 25 times your annual expenses rule, or the 4% safe withdrawal rule, we can come up with the answer. So if you want to spend that median income amount I talked about, which is about $50,000, you're going to need to multiply $50,000 times 25. and that should give you $1.25 million. So once you get enough assets to where the worth of them is $1.25 million, and generally when we're talking about these kind of assets, we're talking about more liquid assets. But let's say you have a well-diversified amount of index funds that are worth $1.25 million. Then technically, according to the 4% rule, you are now completely financially independent because you can withdraw 4% of that or less per year and live off of it. And obviously, the way that math works is the less you spend, the less you need in order to become financially independent. So the $50,000 per year, you need $1.25 million. $40,000 per year, you need only $1 million. And so on and so on. It can just go down. Just multiply your annual spending or your planned annual spending by 25, and that will be your answer. And you can also keep in mind that just because you want to become financially independent, it doesn't mean that you actually have to completely retire and never work again. Now, the 4% rule actually does take into account like the worst case scenario, as if you've never earned another dollar again in your lifetime, and still your assets should last you your entire lifetime, based on so much math and statistics that is beyond the realm of this video. But it doesn't mean you can't just work, or it doesn't mean you can't pursue a passion project and still make a little bit of money on the side. In fact, that could make your financial independence journey much more bearable, much easier, and much more enjoyable in the process and when you do claim your financial independence. Imagine if you can reduce your expenses down to a low amount, such as $30,000. Instead of needing to work, 40, 50 hours a week at a high-paying job in order to, spend $100,000 like most people do, you now can just work part-time, half that amount of time, maybe 20 hours a week, making a lower amount of wage, even in an easier job. And let's say you made $20,000 a year from that part-time work. Well, that other $10,000 can come from your investments. And if you're utilizing the 4% safe withdrawal rule, then that other $10,000 that you need to fill is very, very easy. You don't really need that much in investments in order to do so. Also, you can withdraw less than 4%, and in theory, you would be able to even grow your net worth, even if you're withdrawing a small percentage of your assets. Let's say you're only withdrawing 2% of your assets. Then your investments and net worth should grow about 2% average over the long term, even taking into account inflation. So it should grow 2% over inflation. There are many different ways that you can achieve FIRE, and especially lean FIRE in particular is very beneficial because you can work part-time and pretty much support a majority of your spending just on that part-time work because you have reduced your expenses to a smaller amount when you're going for lean FIRE. So how do you achieve lean FIRE? Well, I've already mentioned that the biggest component of achieving lean FIRE is reducing your expenses. Now, that doesn't mean depriving yourself of fun and depriving yourself of life and everything that it has to offer, but that does mean being less wasteful. So lean FIRE in particular, or just being frugal, is about minimizing waste. It's amazing how much waste is produced in the United States right now, and how much money is just wasted, how much resources are wasted every single day by many people who might not even realize what they're doing and what the impact that they're having. There are a multitude of ways that you can reduce the amount of spending that you spend, and that's not really what this video is about, but just as a general concept, focus on the big three. Reduce your housing expense, reduce your transportation expense, reduce your food bill, live in a lower cost of living area. Stop buying unnecessary things that you don't need that are just going to sit there and collect dust. Focus on being more minimalist, and perhaps even just increase your income in order to speed things up to getting to your FIRE goal, by maybe starting a side business, starting a side hustle, or just working more hours, whatever it may be. Because really, how you achieve lean FIRE is going to be very similar to how you achieve any kind of FIRE, except that when you're concerned with lean FIRE, a big priority of yours is reducing your wasteful spending, getting your annual expenses down to a minimal amount where you can maximize your satisfaction, maximize your fun, live a great life while spending very little, much less than what the average American does, even when it's considering the median income. Let's say the average American family household is spending $50,000 per year. Well, you can live a great life spending only $30,000 per year thanks to lean FIRE. And that's going to make achieving financial independence easier. That's going to allow you to focus on the things that are really important in life and that are important to you. And it's going to offer so many other benefits. So if lean FIRE is something that interests you, I highly recommend that you watch this other video that I made, if you haven't already, called How to Achieve Financial Independence in 10 Years. In that step-by-step video I made, it's a little bit longer, but it's packed full of good information about achieving financial independence. And much of it correlates to lean FIRE. So it should be popping up right next to me just about now. And I highly encourage you to watch that video, because if you enjoyed watching this video, I know you will enjoy watching that one. And speaking of watching this video, I really appreciate that you did watch this video. Please don't forget to like and subscribe to the channel. I'm Zach from OnCashflow.com, and I hope to see you next time.